With us, I want to bring in Andy Bell because we're seeing, we've got a number of companies to go through now, but we're seeing shares of Starbucks plunge after hours. Why?
This apparently is the first sales drop since 2020, partly consumers cutting back, also cold weather in January, but essentially a more cautious consumer around the world. Same-store sales in the latest quarter, 4% down. Analysts had been looking for a gain of 1.5%. And this stock was already under pressure. As of today, it was down 22% in the past year. The chief financial officer, Rachel Ruggeri, telling Bloomberg, we were not pleased with the performance this quarter. But it was a widespread pullback, though, by customers. Overall transactions went down 6%. And they were down in all of the key geographic segments. So investors are out of love with Starbucks right now. If we look, say, at a 5-year chart, we can see it's missed the rally in the S&P 500.
I mean, Andy, I was talking to an analyst this afternoon. What is, the stock's been under so much pressure. Yeah. What's it going to take to turn around? He said, we already know China's weak. We know about the Middle East. We know that wars are affecting international sales. But let's see an uptick in traffic. Let's see North America at least come back. Two strikes on that, right? North American sales fell. We were expecting tepid growth. And as you said, right, traffic was down. So it doesn't seem like this is the quarter that's going to maybe bring in those buy the dippers. Why don't we bring in James for that? It might be tempting to buy sort of a blue chip company that is down and out. But Starbucks, I guess, isn't really giving you those compelling reasons or showing you that maybe they're at the end of their tough times.
Yeah, nothing compelling and really no catalyst. I mean, I think that's what investors really need to see out of a Starbucks. But you got a lot of things that are headwind, and we're as bearish about Starbucks as we are bullish about Amazon. For sort of the similar reasons. You've got nothing going on with Starbucks, and this is not the first miss on earnings. And I think that a lot of us that are institutional shareholders, miss once is one thing, missing twice is really says that there's a problem. And I think, as your guest says, consumer spending is a problem. I think there's a brand problem, pricing problem. And with all the great alternatives in this new AI tech-led bull market, I just think it's dead money. I would stay away from it.
We are seeing the shares pull back, as I mentioned, down about 7%, $82 a share. Andy, this looks like the lowest level in the stock since, mid-2022.
Whoa. Yeah, it's quite the drop. And Starbucks is also trying to lean on buy one drink, get one free, or half-off deals of various sorts. And, of course, that's going to eat into margins. The miracle for this company, people thought years ago, in Middle America, nobody's going to pay $4 or $5 for a coffee. Sure enough, they did. Charging high prices on an extremely profitable product category has been the key to Starbucks' success. But if they're cutting prices, that's going to eat into earnings.
Sales dropping 11% in China. James, we know that's been a challenging market for Starbucks. Would it be wrong to extrapolate this to other companies like an Apple that have also got some big skin in the game in China and say maybe this is a widespread China problem, or is this a Starbucks problem in China?
I think it's both. Starbucks has got issues related to margins and costs. But yes, then you throw in the China situation, which many companies are having to battle with. But I think it's both of those that really hurt Starbucks here. And it's hard, as an investor, I'm always looking, and the team, looking forward. Okay, how do they what's the catalyst to increase the growth rate or the margins? And we just can't see that. Now with Apple, that's a different story, which we could get into. We see higher margins ahead for Apple and a catalyst of AI. I don't know how you bring AI to coffee, but if they can figure that out, then it's going to make a world of difference.
Andy, any last thoughts on Starbucks?
Yeah, it's interesting. This Chinese competition, Luckin Coffee, is taking market share away from Starbucks in China. They're fighting back with lavender drinks, apparently. even in this market.
Isn't that just Earl Grey?
Lavender, yeah, no, that's bergamot, isn't
Bergamot?
it?
A hint of lavender.
It's too watery for me, Earl Grey. Give me that dark Assam. You can trot a mouse on it. It's so strong. In any case, Starbucks, it just looks like investors are deciding there's better opportunities elsewhere. And they're still struggling with this problem of trying to speed up the drinks production. There's always a lineup. People are impatient. But of course, that increases stress on the staff. And they are about to resume talks with the union after fobbing them off for almost a year.